Bloomberg economic report. We'll take a look at that. Let's get the screen share up and running. Say good morning in the chat. Nice to see everybody. All right. Today's news. So Thursday, Wednesday. I'm focused on PPI, CPI. Wednesday, 8:30. Right here. So revisions, 3.7 revised down to 3.4, 0.9 revised down to 0.7, 0.9 revised down to 0.7, 3.3 revised down to 3.1, 2.8 revised down to 2.7. Expected headline PPI 3.3 came in 2.6. PPI core 3.5, forecasted came in 2.8. So market's all excited that it's way under with the surprise print last month, and we are staring at about a 0.5% gap higher this morning. So we are looking at a 50.33 close yesterday on the SPY with a gap higher today around 0.5%. Levels to watch for, we're looking at a VIX of 14.75. So let's do the math. 14.75. So 0.92% move. Pretty interesting call level above 65.30. We're probably going to open up higher than that. We go up about 0.49%. We're looking at like a 65.40 open this morning. So we're already looking on a 0 DTE. We're opening up near the highs. Although, I mean, based on the VIX, we could certainly go higher. So this would be a 0.92. So 0.92 puts us around 65.72. So 65.70 to 75 potential top. And move this down 0.92 from the close. Unlikely that we're going to make this close since we're gapping up so high, but 64.52. So we'll go 64.55, 64.50. Potential bottom. Okay, I can make this a little bit easier with this workspace here. This has a high based on the VIX around 65.57. This will shift. I can toggle this, which is kind of nice. So I can toggle this based on the previous day's close or today's open. So when we have price opening up much, much higher, I can just toggle this indicator so the box will shift as well as the ATRs. So that's what I'm going to be watching for. If we're opening 0.5% higher, we're already going to be at 100% ATR. So if it's possible to sell like the 150 ATR or the 200 ATR, those are some pretty good call levels. That's a 65.70 and a 65.95. So these are two levels that are unlikely to be reached, but I would not be offended by like fading those moves. One thing we might want to take into consideration is, let's say that we do have a run up into these levels today. Maybe we look to sell this for a 1 day instead of a 0 day. I say that because we've experienced the only time we've really taken losses here these last few weeks has been when price has gone up for the day and closed at the highs for the day. And then the next day it goes sideways or goes down, right? So if we stretch into the 150, the 200 ATR, I'd like to be kind of fading that move and let the market makers continue to provide some guardrails. But maybe a 0 day is tougher versus a 1 day, you know? To use that number or wait till open. I do both. I kind of have the two levels that I want to watch because the previous day's close is what I typically look at. But when we have these big blow off gaps, like a 0.4, 0.5% gap, higher or lower, that tends to kind of throw off. Well, not throw it off. It just means like I want to be mindful of like potentially the gap higher and still taking the plus minus of the day, right? So if we go SPX, fresh highs in the portfolio for the year by another big jump. I mean, that's a 23K jump this morning, which is pretty crazy. I'm curious where most of that's coming from right now. Big jump in IBIT, so we must have some gap higher on Bitcoin. Um, HUM, I just put that trade on yesterday. That's showing up $3,600. Baidu, that's another gain as well. Tesla, okay, these are pretty big jumps. Pfizer looking a little better. Bought some shares of Pfizer this week. Russell 236. So anyway, all right. Let's go to the SPX for the 0 day. I'm going to have some working orders. 66 and 66.10. I'm going to go ahead and let me see. 60. I mean, we're not there yet, but who knows, man? I'm gonna cancel these and just get a better feel for the 0 or 1 day. Um, and then we're putting pressure on that call condor waterfall income for the end of the month, which I still think we will be below 66.40 by the end of the month. That is hopefully the plan. So let's go replace. That's for $200 profit. It's going to be close, but yeah, I'll just leave it there at 30. I guess I pulled in $2.30 credit, setting a debit at 30 cents. So plus minus on the day for the 10th, plus minus 22.5. So if we open up about 0.5% higher, we're going to be right around the 100% ATR. Question, of course, is does it hold this high, push high for the day, or is it something that we should be looking to fade? Price action matters. Market's clearly excited about the softer PPI today. We still have CPI tomorrow, so it's a whole new day. But that plus minus on the day wouldn't necessarily be from the close because we're already going to be 32 points higher. So if we open up here, maybe that's where we look at our plus minus 20. So how high up can we go as far as selling premium? I mean, realistically, I could probably sell that 150 ATR today around 64.70 and have a decent amount of premium. We're gonna sell maybe for $1 on a 5 wide, which wouldn't be bad. That'd be 150% ATR. I think I'm gonna take that trade. If I can sell the 150, I mean, we've only seen, I think Jackson Hole was the only day that stretched into like the 170, 180 ATR for the day. But let me pull up this software as well, just to double check. And see if we're going to be blowing through some of our resistance levels. Because we're literally opening up like right here at the highs. So let's get some pre-market. Very interesting. So pre-market today on SPX, the biggest level is 6,500. So if we open up around 50, wow, that's crazy. We open up around 50. My biggest pre-market level is 6,500. So I think I'm going to try to fade, and I know I've been doing this for a while. I'm going to try to fade these highs. That might not be a welcome opinion, but I continue to take stabs at these highs, and I'm enjoying the melt up. My overall portfolio is still tilted bullish, but for day-to-day opportunities, it's harder and harder for the market to aggressively grind higher. We do have the VIX that's been smashed back down below 15 again. And so I just think if we can get decent premium selling high enough, I'm going to try to do it. So, but there's a lot to kind of take in with the market gapping as high as it is. We're gapping at all-time highs. Is there any real selling that's going on here? Maybe. I don't know. If the market gaps and continues to push, well, I'm hoping I can sell high enough, and I'll continue to kind of level in at the 150 to 200% ATR. If the market is going to turn hard, where we gap open and we immediately come back down and fill the gap, similar to what happened on non-farm payroll, well, a little bear call spread goes a long way, right? So we still need to watch for kind of this trend line structure, or you can go back a little bit deeper because the market clearly hasn't broken that trend line structure. So even here, got a little messy and noisy. I mean, it's hard to draw like what trend line the market's behaving with because that gap lower was a fake out. right? So it's interesting how non-farm came right down to this trend line and then bounced back up. Support over here, start over here. This was more of like a fake out trade for the gap open on Monday. So is this a trend line? Maybe. I'll keep an eye on it. Okay. So anyway, it's looking to gap up about 0.5%, which is pretty large. That's a large gap. Um, my daily profit play indicator, this will shift based on the VIX. We should be looking to kind of cap this thing. I'll go based on the open. Um, I'm looking at the ATRs as well. So I think that like 65.70 to 65.96. And again, calculated the highs, 65, 70, 75 potential top based on the VIX rule of 16 with yesterday's close. That can shift based on a gap higher. Okay. So I don't just assume that I always have the top perfectly pinned. I don't have the bottom always perfectly pinned. If anything, I would say we gap higher. If the market does come back and fill this gap at all, that we can, sell high for starters at a good level. If price comes back to gap fill, we get paid very quickly on a bear call spread. And what I'll likely do is I'll modify this level, but I'm going to make a case for we gap up into like 45 or 50. All the gamma levels are lower. So 65.30, possibly the bigger one is down here. That's at least I'm showing pre-market with my dynamic trend. Like this is our largest order pre-market for the day. Now, this changes in real time. So once we open up, I'll flip over to real time and see where things are at. Because if we see little to no bearish gamma or negative gamma, then selling is pointless, right? Or looking to go down is pointless. Okay. Didn't get into the broken wing butterflies, 919, 930. Those were filled yesterday. Yes. So that's a 66. And I mean, those are pretty high up there, Ed. And the good thing is if you take those same trades, you probably can take my strikes and get a much better credit. You can probably get those filled for $1.50, maybe $1.30 to $1.50 today with the gap higher. So, and I feel like I'm pretty far up there. I mean, 66.40, 6,700. The market expected like a plus or minus 23, 22 points, 23 points, and we're gapping up about 30 points. So you're getting like a little 10 point bonus. So, I mean, and again, you don't have to follow these same strikes either. I was happy with the dollar. If I had to do the trade over again, I would just go higher in strikes and still collect the dollar. So I mean, it's tempting to be like, well, I'll take Chris's strikes and get $1.50 to $2. Well, this trade might be more in the way now, versus go a little bit higher, have a slightly higher probability of profit, and stay out of the way and still collect $1 versus $1.50. So I took the trade yesterday. I didn't think the market would have a huge. I thought CPI was going to be more of the reaction versus PPI, but clearly it was a hot producer price index last month. The market got all bent out of shape about it, and then to finally revise everything lower, clearly everything's all excited. Yeah, we'll see. I mean, look, we still have to get through the Fed, right? I mean, that's the whole point is we got to get through the Fed. We have to basically um, we've got to keep this like one of the most extended 50 period bar counts running ever. With overbought conditions, a rising wedge look. I don't know if that's going to happen. I mean, when it all settles for the month of September, I would think technically this market wins out. So what does that mean first? That we could go higher before we go lower. I just find it difficult to believe that we're going to be blowing off these tops without coming back at least 3%, and building into this idea that, the Fed's going to be cutting rates and it's perfect. It's good. It's fine. But I think the Fed cutting rates is also everything's been priced in that the Fed's just going to cut rates. So how much more can they price in? I don't think the Fed's going to come out swinging with 100 basis points cuts. I don't think they're going to surprise us with 50 basis points cuts. I think they're going to do one cut in September, and they're going to continue to watch. So this isn't getting any bigger, right? If PPI numbers come in super soft tomorrow, does this go up? This will be interesting. Like, and I could see like a case for this. This is the probability next week for the rate cut for 25 basis points, 90%. Anytime you see this tool, the Fed watch tool, this high, it rarely shifts aggressively to be like, oh my gosh, we're 50-50. But given the fact this market is super sensitive around everything inflation, everything Fed, if CPI data tomorrow comes in really, really soft or much lower than expectations, I could see this case increasing and this case decreasing. And it makes it a little bit more confusing to like, okay, now what is the market expecting? Are we now at like a 30% chance of a 50 basis points cut and a 70% chance of a 25 basis points cut? It's still probability 25 basis points, but it will throw the expectations off a little bit where now it's like, oh, I guess the market's pricing in more aggressive cuts, you know? So this tool, by the way, has not been wrong since 2009. So there haven't been any surprises on this tool. Yes, it shifts. Yes, it changes. Yes, this percentage will be different maybe by the end of this week. But usually going into the day of FOMC, this whatever is 51% is usually what the decision is. Okay. That has been, I think that's been the problem with this Fed transparency is that they are always kind of backing themselves into a corner with what they say and then ultimately what they're forced to do. So they don't really have the freedom to surprise the market much anymore. Okay. When the Fed doesn't cut, I don't know if that's going to happen. That would be I mean, honestly, if they don't cut, that's the biggest surprise of all. I think Donald Trump might murder Jerome Powell if they don't cut. If this was Russia, I think Jerome Powell would be poisoned on bench somewhere. Anyway, Oscar says, filled the 919 broken wing butterfly, but now see the value this morning is bouncing around. It's not really going to matter until opening bell. That trade will matter, coming close to expiration. What will matter is if we see price going down. If we get filled for $1 and change and price all of a sudden gaps higher and then starts to fall, what we need to see are those levels, which are in the 6,600s. We need to see those levels get further out of the money. So the more this market keeps pressing higher, 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 it's pushing those closer to at the monies. And it's going to be worth more if you take that trade. But as far as that idea, trying to keep it out of the way, like we had before, we're at fresh highs again. This is not like a 0.5%, 0.58. Good Lord. 0.58% higher. It's a big gap, man. Okay, so 0.8%, 0.8%, 0.58%. I mean, we're opening up around like 50, 65, 50 or so. It's pretty crazy, man. So that's, 150 ATR to 200 ATR. If I can sell these highs, I'm taking a stab at those highs. It's not going to be a huge credit, but we should get a decent credit at the 70. I would think we can get over $1 going 5 wide in this one. So I might do a 70 by 75 and an 80 by 85 and even a 90 by 95 and just like layer in my contracts, see if I can kind of contain price for these levels. My gamma that I have over here, we're going to be for pre-market gamma, we're going to be pretty much at the top. So what I don't see a lot of is if price is already up above these levels, and I'll switch this to real time in about 8 minutes when we open. Once we're above these levels, I will switch from a 0 DTE to then out to the rest of the week. Because this market also has, not just today's gamma levels, not just today's liquidity levels, but also what's the market planning on, like filling up liquidity wise for Friday and see where the bigger strikes are falling. 919 broken wings now trading for $1.90 credit. Would you open it? Like I said, if it's trading for $1.90, that's a fantastic fill, but I'd rather just go further out of the money and just keep the dollar. So move the strikes higher, get $1. So instead of going for my strikes, which might be in some trouble, my dollar credit, that's a pin price at 66.40 or my pin price at 6,700. If those are trading for $1.50, $1.70, $1.90 today, that's cool. But I just want the trade to be out of the way. So I would just go up further out of the money and shift this 66.40 to maybe a 66.80, maybe a 6,700 and try to get filled for $1. The 6,700, try to get filled at 67.50, try to get filled for $1. I would just be happy with the dollar, but moving my strikes further out of the money. Okay. So that would be, if I had to do it over again, that'd be my plan. But I'm filled for a buck and I'm filled for a buck 10. And I'm hopeful that at some point the market actually cares about a 50-day moving average. That's one of the biggest extremes we've seen ever. So um, the timing of this whole thing with the Fed, coming into next week is going to be really interesting on Wednesday. And obviously having CPI data tomorrow. I just think the market is just so dead set and like blinders on, you know, price in as much good as you can. And I don't think the Fed is here to like smash it. I don't think the Fed is here to ruin things. I mean, that's not their job. Their job is to provide liquidity and stability and mandates that they have just been miscalculating. They've just been too slow to raise, too slow to raise, and too slow to cut, and that's where they're getting all the criticism. But their job is not to ruin the market, and everyone's villainizing the Fed for all these calculated missteps. And I just think that they let the genie out of the box for inflation, and they've just been very slow to make sure that they're trying to put it back in. And so if the data is suggesting that, yes, we've been operating around like the 2 to 3%, all the Fed is really saying, and this was kind of the Jackson Hole thing, the Fed is really saying that the model could change. That instead of us targeting a 2% inflation rate, which was like a Reserve Bank of New Zealand act back in 1989 or something it's a weird old program to say 2% inflation. So if the Fed really says we're comfortable more with like a 3% inflation target or a sub 3% inflation target, well, then we've been sub 3% for a long time, which means it's time to start cutting rates. So I think that's the big shift. All right. Your 6,700 October 3rd on Tasty Trade. I think let me see. Did I list that? Let me see. 9:30 expiration. Yeah, I mean, it got filled. I got filled at a buck 10. Yeah, so my 6,700 is the October 3rd. That's filled at $1.10. And the 6640 for the 19th, which is next Friday, that filled for $1. So I'm in both those trades. Oh, you're right. Sorry about that. That means, yeah, I meant to make that. I'll update that now. That's a 10-3. Okay. Thank you for that. And those did get filled. So the 919 is filled and the October. I need to update. So yeah, in the tracker too. I'm going to update that one in the tracker. It's a 10-3 expiration. There we go. Okay. So it's fixed in the tracker as well as Telegram. Good call. Okay. It seems like we're going to be pushing the high end of these gamma levels. So I will be switching over. I just want to toggle between real time looks like 6,500. I don't know if the market's going to fade today. I really don't. Nobody knows what the market's going to do. But in real time, if we run through these levels, I want to see where my ATRs are at. I don't think the market commonly goes 200+%. So I think selling a 150 or a 200% is, I think it's worth a stab at it, especially if we get a decent fill. What would be challenging today would be if the market decides that today's the day that it gaps higher and runs higher, and then tomorrow's the day that it actually comes back for normal. So I'm not, I don't know. I think that between a 0 day, I've got to be selling nice and high and managing risk, or I consider a 1 day, and 1 day makes it a very interesting decision because 1 day also incorporates the news for tomorrow. So if I'm going high for a 1 day, we could obviously have like another silly gap to the upside too. Like these next couple days could just be volatile, where the expected move is met or exceeded, and maybe we start to see some extremes. So it would be, I mean, we should have nice liquidity. It's not August. It's like traders are back at the desks, people are back ready to rip. But this has been a really strange September to see the market do what it's been doing. I mean, if we go to the monthly chart, I can't remember the last time I've seen a September just look exactly like every other month for the last 4 months. September doesn't look any different than August. Obviously, it's not May or June when we first started this aggressive rip, but it's not looking any different for this September effect, worst month of the year type thing. September, October usually are pretty weak windows, and yet we are up. And it's across the board. I mean, SPX monthly is up a few percent, and we're going to be higher. Like this is going to stretch another. I mean, heck, we're going to be like 2.7, 2.8% high for September. Go to the NASDAQ. NASDAQ is in green with monthly overbought conditions. The Dow is at highs as well for September. Russell is up one, two. This is just pretty crazy. It's really crazy. But, I mean, I can't complain with fresh highs in the year. That doesn't bother me at all. Correction, SPX 919 filled at market 95 cents. Why? Did you take that trade yesterday, Oscar? So 95 cents is a little worse than what I got filled at. All right, we're gapping up. Let's go real time here. So market's going to be up towards like 65.50 today as far as the open goes. I'm watching my real time levels, waiting for prices to open up on my software. So 70, 75. Come on, charts. Lots of stuff happening here at the open. 65.12 should be popping up here to like in the 50s. Let's see where price is at. There we go. So there's the open. And price is way up here. Rocket just filled for profit. Sweet. We opened up around 50. Can I sell a... Okay, so my VIX shifted and my ATR shifted. That's good. We opened up right here, right around the 75% ATR. That didn't take much to fade, did it? Let's just hang out for a second. Okay. Price is moving pretty quickly, so let's just let things settle in for a moment. Let's see here. 65, and if I could sell like the 65.80s today, that looks pretty promising. So 65.80. So far out of the money right now, though. Let me try the... Let's see, 100% ATR is around 60. 60 and 65. I'll try to go 65.70. MVT just had, that's a winner on pinch point. So pinch point had a nice win on Rocket. I think I just dumped my shares of Rocket for winner. RKT shares just got closed out at 21 and change. 21.45 got filled, so that's a nice little winner on that one. But a $600 winner. Up $3,300 total. Nice. $6 per share. Good. That helps a lot. And then NVT. I'm still looking for a daily profit play. Just bear with me. NVT 228 credit. That should have been a winner on pinch. So 480. What happened there? Let me double check something on the scanner. So NVT. Still looking. Weird. All right, let me go find that trade originally. Pinch point. Where'd that trade come from? Sell by. All right, I'll come back to that in a second. I'll figure that out later. All right, let's go SPX. Plus minus on the day. Looking at the 65 by 70. Let's see if I can get $1 out of this trade today. So 65 by 70, pending order for $1. Okay, so that'll be working. And if that's the 65 by 70, I'm going to go 75 by 80 for another $1, pending order. So I'm going to start there. Okay, I'll start there. So that's just a bear call spread. I'm going to look at my deltas here, 65 by 70 on the bear call side. If I match that up with a 65 by, I mean, I can get $1 on this, go 5 wide. Let's see. It's a 14 delta, 13 delta. 65.10 fills the gap. Let's see. As long as I can get $1 on this trade, I'll be pretty happy. Let me get $1.10. $1.10, Iron Condor. Let's try it out. $1.05 maybe. Come on. Okay, trades in for $1. So I do have a standard daily profit play coming in the chat right now. So in Telegram, SPX, new trade. Today's the 10th. $65.65 call, $65.70 call, $65.05 put, $6,500 put, $1.05 credit. Okay, that trades in. Okay, and then the 65 by 70 is filled for a $1 credit. This is just the bear call spread. 65, 65 call, 65.70 call, $1 credit filled. And I have the 910 expiration, sell the 6575 call, 6580 call for $1 credit pending. So quick update. One trade with standard DPP, entry $1.05 credit. One trade, bear call spread, entry $1 credit. All right, so some tough acting this morning. Some quick trades, $1 for the credit spread, $1.05 for the standard daily profit play. Okay, Bill, just check the strikes. You can type them in the chat. What are the strikes you have? The broken wing butterfly, the reason it's broken is you want to do a, if we're talking about the call fly. So let's say price is, I know price is at 65.45 right now, right? I was doing a buy, so a +1 at 66.35. Let me delete that. So I'm buying one strike at 66.35. Okay. I'm selling two strikes at 66.40, and then I'm buying one at 66.55. Just double check your legs and make sure the contracts are correct. Okay. Because sometimes if you flip it where this is a sell, buy, sell, that's going to be a debit. I'm doing a buy, sell, buy. So my 1-2-1 is I'm selling the wings, or I'm sorry, I'm selling the body of the butterfly at 66.40. Okay, Telegram update, Randy. It's already in, dude. There it is. So I got filled on the standard daily profit play, and I got filled on the bear call spread. That one's still pending. So quick update is standard daily profit play, bear call spread updated. Okay. So now let me find the trades here. October 3rd, this is going to be a broken wing butterfly. September 19th, that's going to be a broken wing butterfly. And today, the 65 by 70 is a bear call. And the other one, so look at this, 1, 2, 3, 4. I got it for $1.05. We're going to have to give this one time. I'm not just going to jump in and assume profit right away. So if I go close, let me set this one and this one there. So we're in for $1. I'll go ahead and set this one at 70 cents. Okay, so my standard daily profit play iron condor dollar credit or $1.05 credit. If I put it for 70 to 75 cents, that's going to be my winner on the day. And the bear call, I'll watch that one individually. So pulled in $1, it's already showing 70 cents. So that's already a small winner, which is kind of nice. So keep an eye on this one as well. Okay, so it's coming pretty fast this morning. So I apologize for the speed, but that's what happens in 0 day sometimes is we get filled and we gotta jump in and start managing trades pretty quickly. Okay, Randy, you good on those updates? All right. So far, so good. So working orders. This one's still pending. The Iron Condor is around break even right now. And I haven't set a take profit for my just the bear call spread. If the bear call spread is paying like they're showing 50 cents debit, 40 cents debit, 30 cents debit. Like yesterday, our bear call spread, I think maybe 30 minutes after I closed it, was trading for like 20 cents. So it went from $1.10 down to like 20 cents. All right. Yes, Larry, same account. Yep, same account. So there's an overlap there. So I have two contracts in right here. These two contracts, I just have to make sure they're separated where one contract represents a bear call spread, the other one contract represents my daily profit play. So I got to be a little careful that I'm not losing sight of the trades. Like if I try to close these together, I need to make sure I'm only closing out one contract for the daily profit play, and then one contract for the bear call spread. Okay. All right. Good stuff. Okay. So I'm going to go back to daily profit play, add in today's trades. So 463, 464. Center price is around 65.45. First trade was a 9-10 expiration. 6565, 6570, 6505, 6500, That is 5 wide for $1.05. And then I have the SPX 910 expiration, 6565 call, 6570 call, 5 wide, dollar. Okay. So far, so good. Between the two trades, if I can add up to get close to $100, I'll just take the winners hopefully on the day. So daily profit play is still trading for about $1 right now. And I want to see if I can get the bear call, which is right here. It's trading for about 70 cents. I'm going to put this down to I think 50 is pretty good. 50 is pretty good on that trade. I'll go 50 cents on that one for one contract. That way, at least I can track everything. So for my bear call spread, trying to get 50 cents. For the Iron Condor, trying to get out for 70 cents. That would be 50 and 35, that'd be $85 on the day and the morning. I can take that. Let price do its thing. And then we still have a pending order at 75 by 80 for $1. So price would have to go up a little bit higher for that one. Okay, let's take a look at some liquidity levels here. So we're running right up into the resistance, right between the 50 and 100% ATR. Price just stays choppy for the morning. That actually works out pretty nicely. And let me do one thing. I'm going to toggle this to a slightly larger time frame. Let's go short term versus 0 day and see if these levels are larger to the upside or the downside. Okay, so bigger level here for the next couple of days is like pretty big resistance at 65.50. And then calling out for the rest of the week, this market is like, struggling to say anything much higher than 66. Which in a way is kind of a good thing because our broken wings that I just got filled on yesterday for $1, that's a 66.40. So I'm hopefully, going to stay out of the way there. So I'll go back to 0 day. Okay. And if you like this software that I have, I mean, I've got affiliate codes for these softwares that you can save like almost $2,500 on this software. If you like this one, I use this stuff every single day. My daily profit play indicator. This one is ready to rock and roll. I'm going to double check. I've got a code for Thinkorswim. I'm going to double check that everything looks good on it today, and that'll be hopefully ready to go. And then I just got word from the Tasty Trade team that they should be able to check with their like chart team and try to get it installed inside their their platform. So hopefully good. Yep. So we'll have TradingView, we'll have Thinkorswim, and then Tasty will be in their platform as well. I'm trying to get the team to post it for me. So that might take a couple days, but I'm going to double check everything today. Okay. So that is where we are at. I'm going to do one thing on my indicator is I'm going to take my daily profit play indicator here and shift it to the open. There. So now based on the open and the VIX, potentially the 100% ATR, 50% ATR, 65, 75, 100%. Could we go a little bit higher? Sure, we could. But between those two levels, let me go back so I'll put in a little horizontal line here. That's the VIX rule of 16 based on the opening bell price versus the VIX with the previous day's close, which will shift this a little bit lower. Okay. So between 65.75 and 66.10, I mean, those are obviously a long ways apart in a 0 day environment. But ATR wise, I mean, from yesterday's close, we'd be pushing up into the, 150, like 100+%, 150. So we just have to be mindful, like that's not going to happen very often. But the nice thing today is so far we're in, 18 minutes of trading and price hasn't done anything. So for a daily profit play, this is pretty perfect. Okay. Gil says your 66 or 65, 65 by 70 call, which is filled for $1.60 when I entered. The mark is now 20. Well, is that true? That can't be true because I'm not getting filled. So my bear call spread's trading for like 85 cents, 90 cents. So it's still there. Like I'm still in the trade. I'm still holding the trade. So nothing is closed yet. I'm still in both trades. Daily profit play and bear call spread still in both. Okay. I did this yesterday on my final hour session. How many of you were in my final hour session yesterday? That was my YouTube session in the afternoon. I told you that I would do this. I went ahead and looked at this should have frozen the top line here. Let me see if I can freeze the top line. Freeze top row. There we go. So this is the P&L for 3 years of zero DTE. This is if you maxed out, where if you take a losing trade, you're willing to go up to 2 contracts every time until you win. So if I lose one, the next trade is going to be 2 contracts. If I lose that one, I still keep it at 2 contracts. So that's this column. This one would be a step where if I lose one, I go to 2. If I lose that one, I go to 3. If I lose that one, I go to 4. And this one is a martingale. If I lose one, I go to 2. If I lose that one, I go to 4. If I lose that one, I go to 8. Okay. So I'll keep this top one frozen. I wanted to go through every trade. Now there's 2 things that I can showcase here. Number one, the risk on these trades, we can contain the risk to make it much smaller. Okay. So this trade here of like 1154, if we're only doing 10 wide spreads, we're never going to risk over $1,000. Okay. If we're only doing 10 wide, we're never going to risk over $1,000 with one contract. Now you're going to risk over $1,000 if you do 2 contracts, but we can, tighten up the risk here a little bit. And I say that because one of these trades was like Liberation Day, or like, I think it was the whatever post Labor Day. The 7th was the bottom in April, and the 9th was like the big rip to the upside. That's kind of how it played out with that like 3 or 4 day window. I know that because that was like Augusta week, and I was thinking like, well, this whole Liberation Day garbage just ruined my trip to the Masters this year. And then when we had the 9th, which was I think Wednesday, it was like, all right, I'm going to the Masters. So it was a silly week, but the risk on that one showed like a $4,500. Yeah, right here. Okay. It showed a $4,600 loss. Well, clearly, if we're taking defined risk trades at 10 wide, we're not going to lose that much money. Okay. But if I were to tweak the loss, I don't know what the gain is as well, because I can't just take away and say, well, I can only risk like, $900. But then my gain is going to be maybe $50 versus some of these, which you're making like $100 to $200. So I'll take this with a light grain of salt, because I know that we can manage risk a little bit better than what this shows. But these were just strictly based on deltas. Bear call spread just hit for 50 cents profit. So that bear call spread for $1 is out at 50 cents. That's a winner. And the Iron Condor is still working. Let's see where that's at right now, trading for 87. Keep an eye on that one. All right, so that was a nice quick win on the bear call side. So $1 in, out with 50 cents. I'll take that winner. And then the Iron Condor is still going to work. We're trading for about 15 to 20 cents profit right now. So now I just have this trade left. Right there. It's up about showing $40, which I don't think that's accurate, but that's not updating right now. That'd be lovely if it is, but I think it's about 15, 20 cents in profit. Yep. So I'll go back to that spreadsheet in just a moment. I think I'm gonna close these out here pretty quickly and just take the 2 winners on the day. So that'd be a 20% winner. If I close out for 85 cents, that's a 20%er. If I go, that'd be 35 out of 105. That's a 33. So maybe I go 75. So a $30. I'm going to change this to 75 cents. So $1.05, looking to get out at 75. and just take the 30-cent winner. And that should be good mechanics on the day. Greg says, I did a bull put combo, 140 out of 80. Good. Good. Yeah. Okay. I'm just keeping a price action watch up here. So far, so good. Just still remains pretty choppy, which is what we want. And we're looking better. Come on, man. We're right back around center. What are you doing? All right. We just got to let price and time just do its thing. Let's go back to this. So this is the standard daily profit play. Okay. This is willing to go to 2 contracts. If you take a loss, you go to 2, you stay at 2, you stay at 2, you stay at 2. This is a step where you take a loss, you go to 2, you take a loss, you go to 3, you take a loss, you go to 4. You just step your way 1 contract each, and then true martingale. Now, what I found very interesting about this whole thing, this is over 800 trades for 3 years. Okay, that's a lot of trades. That's showing up every single day, daily profit play, placing a trade, which we can do that every day without fail, no problem. Not overthinking the news. What about PPI? What about CPI? Gap higher, gap lower? It doesn't matter. You just place the trade at opening bell. So it can be very simple, okay? Now, what I think is interesting about this is the biggest losing streak that we had in 800 plus trades. Somebody take a wild guess at how many losses we had in a row. What's the biggest losing streak we had? Over 800 and some trades. Larry must have been in my session yesterday. 2. The most losses we had consecutively were 2 days in a row. Okay. So that being said, the martingale didn't really allow us to apply like, okay, 1, 2, 4, 8, because we never lost that many trades in a row. Okay. So this is what the results show. Total profit for 800 plus trades on 1 contract only was $17,062. If you took a losing day and then the next day you show up with 2 contracts, you made $19,848. That's a decent bump. I mean, you're almost at 20 grand. That's like making $3,000 more, but you are taking on more risk. Okay. The step increase going from 1, 2 to then 3. So if we lose 1, we lose 2, the next trade we take is a 3rd contract. That did make some more money. That was $20,383. That's another, $600 or $700. I guess $500 more. I think this one is where I start to realize like it's not that awesome to take on the extra risk. I mean, I made an extra $500, but if I were to lose 3 days in a row, that hole gets really, really deep. Now, the martingale did end up making some more money, but I don't think it's worth it at all. $17,000 to then $21,000. Okay, you made $4,000 more, but I'm just saying, like moving forward, if the strategy ever were to take 3 losses in a row or 4 losses in a row, which I believe this is how good market makers are at their job, it's rare that happens. Okay, I mean, I'm pretty confident here that since the invention, okay, which 0DT technically has been around since 1973. Okay, but in our world, 0DT was pretty much modern market in 2022, like summer 2022. Every index, SPY, Qs, SPX, XSP, they all have 0 to expirations. So for the last 3 years, every day you can trade. I mean, I think the sweet spot is I'm willing to go 2 contracts. I make about $20,000. That's a $3,000 increase by just taking that 2nd contract. Going to a 3rd contract or going to a 4th or an 8th contract, I think that's an insane amount of risk. I really do. Okay. So I want to show the numbers because I'm not that impressed by going crazy high contract sizes, because all you're doing is you're 1 losing streak away from blowing up your account. And that's Captain Condor, whoever that guy is, it's 1 bad losing streak away. And I say losing streak, I mean, literally if you lose 3 or 4 trades in a row, I mean, how deep is Captain Condor's pockets because he's already taken huge trade sizes at trade one. So when he's doubling and tripling down or going from 1 to 4 to 14 to what, 20 something, it's just a lot of risk. So I don't know how big the account is. I just feel like that's not a realistic place for a lot of traders to start. And if you've ever taken a trade where your heart's beating out of your chest, it's probably not a good place to be either. So this to me is no pressure. We can cap the losses because we can choose the width of our spreads. And I like the idea of like, look, you don't ever have to increase your contract sizes and you're still doing fine. If you're willing to take an extra trade on a loss, so I lose one contract, the next trade I'm willing to show up and take two contracts, I make a pretty big jump in profit. I go from 17K to 20K. Like, I'm pretty happy with that. That's a $3,000 increase, and I'm only increasing by one contract. And as soon as I win, I go right back to one contract. So overall trade size pretty small. So it's hard to convince me that going a third contract or going like a double and double and double contract, it doesn't really show that the risk is worth it because you're only one, like a third loss in a row, which hasn't happened in 800 plus trades, but that doesn't mean that it can't. I mean, I'm just saying, like, I don't want it to ever happen. I don't want us to ever take losses. But if it did happen, I'd much rather know that my risk is always the first important thing that I have to manage. Okay. 0 day, it's super important to manage. So I'm just saying martingale is a slippery slope. I think it gets traders ultimately into a lot of trouble. It works until it doesn't. And I showed you this. Or I told you this, I worked with, a lot of, I ran a currency fund for a long time. I built a lot of currency robots that were great at what they did. Anybody that gave me a martingale robot ultimately ended up failing, like failing in a big way. Like it would get so large that they would end up margining out. They'd end up, blowing up the account, or they couldn't afford to take the big enough trades to then work themselves into profit. And that's with think of Forex where you have like 50 to 1 leverage or 100 to 1 leverage or even 200 to 1 leverage. And somehow you can margin out, you can leverage yourself out with a martingale by going too big. Okay. All right. So anyway, just thought that was the data I want to run. So now we know. Just trade one trade, you're doing fine. We can cap the risk, we can cap the gains, but we expect to win. We're winning 90% of our trades. We are willing to take a second contract. If we were to lose on one, we just step it up to a second trade. And the biggest loss streak we had was 2 trades in a row. Like, I find that pretty comforting. All right. What else? See what we're doing on the Iron Condor today. We're trading at $1.15. So nice winner on the bear call spread. We're upside down about $5 or $10 on the Iron Condor. Just let price do its thing. Okay. Let me see here. I do have. Give me 1 second here. All right. Just 1 second. Is your spreadsheet only? Yeah, it's just that. This is just the data. This is just the data running like the basic standard Iron Condor or the basic daily profit play every single day. So this does not use any discretion. This, like, the losses here, like, my track record is here. These are all my live trades we've taken with the service. We have 410 winners, 50 losses. We're 89.1%, all winning trades. Like, so these are real winners. This is not back tested. This isn't the spreadsheet. Okay. These are live trades. Live trades we've taken in the service. I'm winning 89%. Gains in the model portfolio based on $1,000 risk, $87,000. Losses at 26, so net around 61K. That's not bad for a year of this service. It's a lot of trading. We show up and trade every day. The real service, yes, I'm adding a little bit of discretion. Obviously, I think that some days I think are better than others to trade. We've done the diving on this as well.